Great. I know. So we're gonna get started tonight. It is almost near the end of our master class, and we've got a very special guest. Well, I mean, we always have special guests, all right? But I feel like this is like the bread and the butter and the jam. Like this is what most people want to talk about. Yes, wills. Yes, how to move stuff. But how is my how am my cash flow taxed? Like what happens when I leave? And today we're joined by Dimitrios Zaravinos. I think I said that. Zaravinos
Yep, that was
from
good.
Trowbridge Professional Corp. Dimitrios and I have worked together quite a lot over the past, since about October 2023, when we had our first expat seminar at the Trowbridge offices in downtown Toronto. Really well received. Great location. 80 people attended, 30 in person, 50 online, and Demetrios stole the show. A lot of good questions. And since then, we've sent a lot of referrals over to Trowbridge to see what they can do to help out with Canadians who dream of living, retiring, or living abroad partially or permanently. So I asked to send any questions in advance. I didn't get any, but we're going to ask Dimitrios a bunch of questions today. And if he ends up talking the whole hour, that's fine. We can talk about insurance another day. We do have lined up some information about insurance as well. So we'll leave it at that. Dimitrios, welcome, and just give us a little bit of
Thank
an
you.
introduction of who you are and where you work.
Sure. Thanks, Serge. And yeah, Serge mentioned we've been working for 2 years back and forth. We we were introduced to each other 2023, as you mentioned, and we've been doing a lot of these seminars, and we have one coming up, and I'm sure Serge will be talking about that near the end. But me personally, I've been in the expatriate tax, personal tax space for over 25 years. Started in 1997 with Price Waterhouse. It wasn't even Price Waterhouse Coopers back then in their global mobility section. So I did that about 10 years in Canada and Australia. So global mobility was a little bit different. It's more expats, but paid for by the companies who send employees overseas. I did that for about 10, 15 years. When I came back to Canada from Australia, I moved into more of the personal client space. Where it's not so much the companies engaging us, it's individual people who want expatriate tax help, meaning anything to do with cross-border personal tax, leaving the country, coming back from another country, or just simply immigrating to Canada. There's always going to be tax issues, so we help them out with that. It's a space where a lot of the big four accounting firms have expertise in, but really don't want to deal with individual taxpayers. So there's very few firms, Trowbridge being one of them, where we're really, it's a niche boutique type of firm that really focuses on helping individuals, even if it's just one person, it doesn't have to be a group of employees, um, with a whole range of questions from the simple questions to more complex. As long as it's dealing with personal tax, we can help you out.
And how many offices do you have? Where are you located?
Yeah, our headquarters is based in Toronto, downtown at King and Yonge. We have offices in Vancouver. We had offices in Calgary, but right now they're just working remotely. We have an office in London, UK, Germany, and the Vancouver office goes back and forth from LA. So we work remotely out of LA from a different company's offices, but we share the space. So we're looking to expand into the Oceania region. But really, the benefit with our friends, you can't do expatriate tax unless you have offices worldwide. So we're part of the Anderson Global. We have a collaboration with them. They have over 300 offices worldwide and part of the global tax network as well, which again operates in over 200 countries. So if we need somebody in Australia, we have contacts there. Singapore, almost any country in the world, Italy, Spain, that we deal with those individuals, because it's almost impossible for a company our size, about 200 employees, to have offices in every single country. So that's how we mitigate that, or I guess mitigate's the wrong word. That's how we do business with different countries.
Okay, great. So if a lot of our like this is an expat masterclass for anywhere in the world, but a lot of our attendees are focused on Spain. So let's just talk about Spain. So when someone moves to Spain, you would have someone in Spain that you could refer them to do their taxes in Spain. Is that what you're saying?
Correct. Yes. Yeah,
Okay.
we've had just even last week I was dealing with, we had a joint consultation. They charged their own fees, we charged ours. It wasn't a joint. Sometimes we do joint one fee, but we were both on the call. So
Okay.
that helped out. So there was no misunderstandings. Sometimes you talk individually and the Spanish person told me this, but you're telling me something different. We try and avoid that by having joint consultations, but sometimes we have individual consultations and we just share notes. So we're
Right.
on the same page.
Okay. I encourage anybody to just start popping questions in the chat, and Yvette is going to monitor it while I
Mhm.
start asking Demetrios some more in-depth, hard questions. All right. So let's talk about taxes on Canadian, like not just Canadians are going to keep residence in Canada, not snowbirds, because that's a probably
Mhm.
simpler issue. So because we found that many Canadians that are originally talking about becoming an expat have now maybe changed their mind and said, well, no, I'll keep residence in Canada and I'll just fly to Spain for 4 months or Florida or whatever. But people who have decided, I'm moving. So what are some of the things that you can offer as advice in terms of saving on tax or tax taxing that they should know about for someone leaving?
Well, yeah, I think the first thing Canada, as probably everybody knows, filing their own Canadian tax returns, you're taxable on your worldwide income as a resident of Canada. So no matter where you are in the world, if you're still a resident of Canada, you're going to pay taxes as just the same as somebody who lives here 365 days a year. So the first thing, the most important thing, is determining your residency status. Um, because all the planning really fans out from that. If you're a resident Canada versus a non-resident Canada, um, we can't take certain steps to save taxes or mitigate the taxes unless we know your residency status. So that's the first step that we do for any consultation to determine your residency status. And then,
Okay, let's
unfortunately,
stop.
yeah,
Let's before we let's like this is going to be a deeper thing. So residency is going to be based on things like whether you're leaving your wife or husband behind with kids, whether there's a property, or whether you're
yeah,
just selling everything and you're all leaving together. It could be like a gray area too, right? But there's that intent, like even we talked last week about domicile, your intent of where you're living, your intent of where your residence is. So it's sometimes it's clear cut, like we've sold everything. We're keeping our bank account for cash flow, and that's it. We're moving to Spain, right? Otherwise,
yeah, so it really depends. The first thing is it depends on where you're moving to, because if you're moving to a country that has a tax treaty with Canada, it's easier to cease residency to Canada because you don't have to cease all ties to Canada. Unfortunately, you mentioned clear cut. With the CRA, there's nothing that's clear cut. We thought we had cases that were completely clear cut, and it's not so much that the cases were not clear cut, but the agents at the CRA don't understand their own rules and sometimes challenge everything, and it
hmm
takes years to sort it out. But generally, if you're going to cease residency to Canada, you have to cease all primary ties to Canada, and then this is absence of a treaty, and then you're looking at secondary ties. And unfortunately, there's nothing in the Income Tax Act that really goes through what are these primary ties, these secondary ties, other than the 183-day rule, the deemed residency rule, which
hmm
basically says if you spend more than half a year in Canada, we're going to deem you a resident of Canada. You just spent too much time here. But if you're leaving Canada and you want to say, am I resident or non-resident? You really, depending on tax interpretation bulletins, there's case studies, and they've sort of laid out what they say what residency is. It's not in the act, but it's a guide, and this is what we follow. So basically, the primary ties is if you're leaving Canada, you have to have some sense of permanency abroad. You can't just go 5 months to five different countries and say you're non-resident Canada, even if you're gone for 3 years. Generally, the CRA accepts, and as a general rule of thumb, that if your intention is to be gone for more than 2 years at the time you leave, that meets that test. They're saying, okay, there's some sense of permanency. And of course, then you have to prove it. You have a contract, you have visa to stay in that country for 2 or more years. So that's sort of the things they're looking at. That's one of the primary ties. The second primary tie is if you're married, your spouse generally has to join you. You can't have a spouse in Canada and you living in Mexico and saying, "Well, I'm a non-resident." Well, the CRA says, "Well, your spouse is here. That's a significant tie." Um, the third one is they generally want to see that you don't have a home available for your use. Why you have a home, you have your principal residence and you don't rent it out or you don't sell it. Why? The CRA will question that. So that's a significant tie. Now, obviously, you can get if it's a vacation home, a cottage, you can keep it vacant because you only use it for 3 months out of the year and you continue to do that. They're more lenient on that. The last primary tie, which isn't really a tie, but you generally have to be a resident somewhere. They don't want you getting on a sailboat and just sailing and not proving that you're going to
Oh,
some
okay.
destination.
That's
Yeah,
interesting. Because there's that world of the sea, world of the seas or something, that yacht that goes around the
yeah.
world. Do you have any clients that are on there?
No, but that has been challenged in court too. That the
Yeah.
whole you have to be resident somewhere. So then the CRA kind of gets away with that, saying they're relying on the GAP, the general
Right.
anti-avoidance rule, saying that well you're just doing it not to pay taxes, etc. So those are the primary ties, and effectively absence of a treaty, you need to sever all your primary ties, and then they look at secondary ties. They look at do you have bank accounts in Canada? They're not as important. Do you have club memberships? Do you have gym memberships? Do you have safety deposit boxes? Do you have your furniture in Canada? What about a car and a driver's license? OHIP. OHIP is kind of important. If you're living in Ontario, you have to cancel your health plan, or you can't use it because you're effectively saying you're no longer living in Ontario. So those are
Hmm.
all secondary ties. So those are all listed on a form called NR73 if you want to get an idea of what they're looking for. But if you phone the CRA and you say, am I a resident or not, they'll ask you to send that in. Never do that. That's not just our policy. That's the big four accounting firms have the same policies. Unless the CRA formally requests it, we don't generally volunteer that information that's on
So
that form.
this is very important to highlight again, because in my travels and talking to people, some people said, "Oh, I was told I should tell Canadian government that I'm leaving before I'm leaving," and that could just open a whole bunch of things that
Yeah.
you don't want to deal with. And we're not
Yeah.
talking about anything illegal, not telling them.
No, no.
You're just recommending that just tell them once you've left, right? So basically, I'm now in Spain. I'm now a resident here and do my filing. I'm now saying I'm a non-resident, correct?
Well, no, generally the first they'll not when you leave. There's certain other people you have to tell that you leave Service Ontario for cancel your OHIP, your
Hmm.
financial institutions. There's a lot of things you need. Your pension administrators need to know that you're a non-resident, your banks the day you leave. But the
Yes.
CRA really doesn't know until you actually file your first tax return. So if you leave in January 2025, and your return's not due till April 2026, generally that's the first time they'll know unless you have rental property, etc.
Right.
And at that point, if they want to question your residency status, they can ask you to fill out the NR73, which you can do at that time and we can assist. But we don't generally pick up the phone and call them when we become non-residents.
So have you found any complications? For example, I'm gonna create an avatar. I'm, 58 years old. It's 2025 and I plan to retire in 6 months. So and I'll be living in Spain. And then so my company would need to send my T4 of my income, right? Does that come to me in Spain now? Does it just get filed automatically with the CRA? Like what
No,
can
no, the
fall through the
T4
crack?
always goes to the CRA. Where you want it sent is between you and your company. It's not so
So
much of an issue anymore because you can always go to your CRA account and download it.
gotcha. I'm just wondering if things can fall through the cracks because maybe I forget to tell the bank I've moved, or I
Mhm.
and there's like some NR4s that should be issued instead of a T3 or a T5 or whatever, right? So what happens in this? Like, how do you help clients to make sure that everything is kosher down the road?
Well, we help them by number one, hopefully they have a consultation before they leave so we can tell them phone your bank right away.
Hmm.
They need to know because exactly what you mentioned, they got to stop issuing T3 slips, T5 slips, start issuing NR4 slips. If you forget to do it in the issue T3 slips, there's still ways we can do a voluntary letter to the CRA, but it just gets more complicated. It's much easier if the bank knows, if your pension administrator knows that you're no longer a resident, so they can stop issuing T4A slips, stop issuing T5, T3 slips, and start issuing the correct NR4 slips with the proper tax withholdings.
Yeah, good. All right. Any questions that have come up at all, Iveta?
No, I'm just typing up a couple things to remind you and to trigger the questions. I'm sure they are there. Go
So
ahead,
there's a
guys,
question
please
that
type
just
it
came
up.
up. Yeah,
Yep.
John just asked a question about inheritance. I don't know if this is your specialty. You can answer this question, Demetrios. And let's ask John to clarify. Inheritance, is it treated differently after you leave Canada? So I'm going to say you're in Spain and you get an inheritance from a will, an estate that's sent to you. Does that get taxed at all? Or
Yeah, well, I'm not a state tax expert, but I can tell you it could be different. It really depends on whether the inheritance. It's really we were talking about the estate. The estate is a trust. So if somebody leaves property to you, they're not leaving it directly to you. It goes into the trust first. And if you're a non-resident of Canada, the tax, if nothing, if there's no income growth and they just distribute it, there is a different process. It's similar to if you sell the home while non-resident Canada versus a resident Canada. So number one, it depends who's the executor. If the executor is a Canadian resident, then the trust is Canadian. If it's not, it could get very complicated. You need to get an estate lawyer involved.
mm,
But generally, you could still get the property as a non-resident of Canada if you're a beneficiary. But there is different processes. You might have to do a clearance certificate because you're effectively selling your interest in the trust when they distribute the property. They distribute cash and there's capital gains while it was in the trust, then there could be withholding tax on interest, dividends, any growth that occurred because it hasn't settled and distributed yet. So in that case, but generally in Canada, we don't pay a lot of
no.
inheritance tax because there's a deemed disposition. The person who passed away would pay it on their final return, and then it's just distributing already taxed assets. So you can do that as a non-resident, just a different process.
Yeah. All right. So there's a follow-up, and I'll answer this part. If you're the executor as well, living outside of Canada, well, that just opens up a few other things that should be considered about because first of all, talk with a lawyer and make sure that they're aware because if you're outside of Canada and the person that passed away is in Canada, you will probably need to come back to Canada, to the province where it is, to execute your executor duties. So that's something to be aware of. Lately, and we brought up Clear Estate last week, I think, Iveta. There
Yes.
are firms that are taking over these duties where they'll be executors. You don't have to worry about that. You just have to pay them a fee for that, of course. But they are organizations, so there's no emotion involved. They just go by the book. They follow the rules. They follow the wills, and they pay the taxes, and off you go. So I hope that answers some questions. Obviously, average closing of a state
I'm
takes
sorry,
two
that's me.
months. Okay.
Yeah.
Yeah, I've seen it take quite a while. Depends on how quickly it's or how well it's prepared, and that's one of the focuses also. I mean, tax planning and estate planning are some of the most, I guess,
Complex.
complex things that keep us working, right, guys?
Mm.
All right. Talk a little bit about the different tax withholdings on the different types of income, whether it's cash, dividends, interest, capital gains, what you know about that.
Yeah, so generally, as a non-resident in Canada, once you determine you become a non-resident, you have to file a tax return. It's called a part year departing Canadian tax return. It's very similar to a regular return, but you have an exit date. But with that comes certain obligations. So there's a lot of different forms you must file. You need to let the CRA know of all the assets, a lot of the assets that you held at the time you departed, and a lot of those assets could be subject to departure tax. So if you had to, starting with capital gains, you bought IBM shares at $100 a share and you leave and they're worth $300 a share, even if you don't sell them, the CRA said that gain accrued while you were here. We want you to put on your departure tax return that as if you sold it for $300, calculate the $200 gain and pay the tax on that. So that's one of the implications of leaving Canada is you have this potential departure tax. The good news is if that $300 IBM shares goes up to $1 million after you've left, for Canadian tax purposes, there's no longer any tax on the capital gains for this IBM shares because it's not considered taxable Canadian property. They're just shares, and in fact, IBM's a US share. Um, if you have a Canadian home, generally there's no departure tax because that home you can't take it with you. It's situated in Canada. But if you do sell it, capital gains on Canadian property will always be taxable in Canada. So if you sell 10 years from now, even though you didn't pay departure tax when you left, you will have to calculate a capital gain on that. when you leave. So generally, capital gains are no longer taxable once you leave Canada for stocks and mutual funds. But for Canadian property and other taxable Canadian property, you will continue to pay capital gains tax.
Right. And we've seen that they're always looking to change the capital gains. We're not sure
Yeah.
what's happening now because of the situation in Parliament, but that's something to be aware of.
Yes. Yeah. They're trying to change the inclusion rate. So from right now from 20 50% to 66.66%, which increases your tax rate from about 26% to 36% for anything over $250,000 capital gain. So that could have an impact a lot. You'll see that the most with departure tax. A lot of people have foreign properties. So people say, well, I'm not worried about it. My capital gains is usually about 10,000 a year. But when you leave Canada and you had a foreign property, a lot of people bought this property in Rome in the 1970s with family property for 30,000 euros. It wasn't even euros back then, and now it's worth 1 million. Well, you may have a departure tax on your Canadian tax return for that, and then the gain would be those new rules might affect it. Now, I don't think they'll pass, but it is something to look at.
Yvette, any questions?
Yes, Don, just to clarify, I'm reading it out, Dimitrios. If I
Yeah.
remain as a BC resident for 6 months and no less, do I then retain Canadian residency here and keep BC medical, and am I taxed only in Canada? If I buy property in Spain and only stay the other 6 months, do I need to pay tax there?
No, because we have a treaty with Spain, you have to pick a residency somewhere. Canada not only can deem you a resident, they can also deem you a non-resident. So you have to look at your facts and circumstances. Where's your permanent home? Where's your closer economic and personal ties? And they almost force you to pick. Are you a resident of Spain? In which case you depart being a resident of Canada. Um, or are you a resident of Canada? And then you have to look at Spain because Spain might have their own rules. They might say, yeah, Canada says you're a resident there, but we still think you're a resident here. So it's a
So
bit tricky.
probably just a little clarify, Don, what you are saying. So if you will have a permanent home in Canada, you're looking to spend maybe what, 6 months out of the year in Spain? Is that where the question is pertaining to? Maybe if you want to, yes.
So maybe
Okay.
not, maybe make it 5 months to be a little bit more on the Canadian
Yeah,
side.
Yeah. So
yeah.
really, have you really changed your residency? You're just 6 months, 6 months. There's no sense of permanency abroad. They're looking at, are you moving long term for 2 years where your ties are significantly more to the other country than you are to Canada.
Yeah.
So
Yeah.
in that case, you could still remain a resident of Canada. Still look at the health rules are a little bit different. Ontario, BC, they have their own rules of how many days you have to be in BC and Ontario to still qualify for provincial health care. Um, but that's something you have to look at the treaty and say, what does the treaty say? Where's your personal and economic ties? Where's your personal habitual abode? Where do you spend more time? Where do you consider yourself living? Where are you a citizen in Canada, not a citizen in Spain? Because that's also the final tiebreaker test. So effectively, the treaties want you to choose where you're more resident of. Canada is really good. If you're a resident of Spain, in that case, it's okay to try and say you're not a resident of Canada. I've noticed the European countries are not as flexible. They'll just say, yeah, we know you're a resident and we know we have a treaty, but you just spend too much time in Spain. We're going to make you a resident here.
That's a
Hmm.
good like, I know we're talking about Spain, but there is that 183-day rule with snowbirds to the US that can be kind of complicated too. It's not exactly like 6 months and 6 months, right? It's something about the average
Yeah,
of,
no, no, yeah, exactly. The U.S. has a substantial presence as they do a 3 year look back. So you can spend 180 days, never spend more than 6 months. You'll still be considered a resident of the U.S. because of their substantial presence test. They look over 3 years. You can rely on the treaty to try and get you out of that, but it does create a lot of other problems because there's reporting requirements when you're using the treaty and still a resident of the U.S. to get out of that.
is that only for
So
the US then and not for other
yeah.
countries? Okay, got it. So
No,
that's
the
not,
other countries have their own rules. So Italy, for example, this one of the things that we're dealing with is, yeah, you're still a resident in Canada. When they say, oh no, you spent more than 103 days, we're going to make you a resident for the whole year in Italy because they have their own different rules. And the UK changed their domicile rules just recently in their recent budget too. So
Wow.
really, we can't just look at Canada independent from all the other countries.
So how do you advise, like, I mean, it just seems like a wild, wild west. Is there any way, any recommend, you've dealt with so many clients moving to different countries. What kind of advice can you give them when they hit the ground? Like, I'm like, find a good accountant, find a good lawyer, or what? Like,
Yeah,
what can you tell them?
my number one advice would be plan what. So in Don's question, I'm not sure. Does he want to be a resident Can? Does he want structure
He,
your
she.
life? And
Dawn
sorry,
is
she.
DAWN,
Oh, D.
not
I see it
DON.
there. Yeah, Don. Does she want to be a resident of BC? Does she want to be a resident of Spain? What are the benefits? And structure your facts and circumstances to support what you want to. In this case, it would be very difficult to say you're non-resident Canada if you're just 6 months. You're more of a commuter, or a snowbird, and it's very difficult to say that. But I just seen another question there. If I move to Romania permanently, sell my home, then yes, you structure it so you're no longer a resident of Canada. And in that case, it may be very easy. There's a tax treaty with Romania. You're not spending more than 103 days in Canada. You're effectively living there and just potentially visiting Canada. You structure it so your spouse is with you. You sell your home or rent it, and effectively you're a resident of Romania, a non-resident of Canada from that point on. When when I mean from that point on, it's from the time you had the intention to move and you actually moved.
And this is a good place to add that disclaimer that we forgot to mention at the beginning that this is not for specific advice. Everybody is different. We
Yeah.
recommend you consult. So I'm going to take a moment to plug something here, and it's 7:27. I don't want to keep Demetrius for the whole hour, but we can if there's more questions. We do want to talk about insurance. So back to the first few days of this masterclass, we highly recommend you start off with your professional, whatever it is, accountant, lawyer, financial planner. In our case, financial planners. We take you through the process of trying to figure out that whole dream and idea because a good partner will challenge your thoughts and figure out exactly what you're trying to do. What I found in my experience, I can't ask people, what do you want to do with your life? Because nobody has an answer, right? When do you want to retire? I don't know. But if we ask specific questions to kind of get you to think, that's really powerful. Then we build that plan, we figure out what the gaps are, and then we starting to bring in accountants like Dimitrios, lawyers for the wills, and then you get more information coming at you than you just trying to do it on your own with, Googling stuff or ChatGPT. All right, any more questions?
Well, maybe Dimitro, sorry, I'll come back to you to the second part just for Louis to reconfirm. Maybe we were actually chatting about exactly this at the beginning before everyone joined us. So the question is more about the capital gain. Would Louis have to pay it or no? I'll leave it up to you. You know exactly what I'm talking about. So the house, when do we sell it, and
Thank
if
you,
there's
Mecca.
capital gain?
Yes, that's the question.
Sorry, so
Capital gain.
are you talking about your principal residence?
Yes, my principal residence. I'm selling it. I'm moving back to the roots, and now I'm questioning: do I have to pay the departure tax on the capital gain?
No, there's never departure tax on the Canadian property because you can't take it with you. If you sell it before you leave, then you need to file a T2091 form with your exit return. Principal residence, we in place right now. If it's always been your principal residence, you never
Yes.
pay tax in Canada. So there's the principal residence exemption. So you have to calculate the gain. You have to report it on your Canadian tax return. If you don't, there's a potential $8,000 penalty for not doing that. But just report it. You sold it before you left. You report it. You could be in Romania after when you file your return, but the house closed before you left. It was always your principal residence. You report it. You don't pay any capital gains.
Okay, great.
Yeah.
That was my knowledge, but I said let me
And
And
this is
and
one of the
confirm with
things I think you guys do, right, Demetrios? You do
Yeah,
the
so that's the advice, and we can do that if you sell it after you. The reason I'm saying you sell it before, there's two reasons. One is you sell it after 3 months after, you probably still won't pay any capital gains tax, but there's withholding taxes because you sold it as a non-resident. You may have to withhold 25%, and You don't get that money back until you file a tax return or get a clearance certificate. And it's just a different administrative process. And the second thing is we don't know how Romania is going to tax it. So some countries give you a step up in basis so you don't end up paying any taxes. Some countries don't, and they want you to report the whole gain. So it's safer to do it before you go to the country where you become a resident, and you don't have to worry about the different uh, administrative filings that you have selling something as a non-resident versus a resident of Canada.
Okay, that's the plan before leaving. So
Mhm.
we need money for another house there. So,
Yeah, and just keep in mind it's not the date you sold the property; it's the date it closes.
yes,
That's
of
important.
course. Yeah, of course. And that's where you get the money really on the house.
Correct.
The closing time. Okay,
Right.
thank you a lot, Demetrius.
Okay.
What
Any
about
other
TFSA?
questions? Yeah.
What about TFSAs, Demetrios? Can you touch on that?
Yeah,
Tax-
TFSAs are generally tax-free savings accounts. It's okay to keep your TFSAs, but what's very important is do not contribute to a TFSA once you're a non-resident in Canada. In fact, we always say don't do it 2 weeks because sometimes there's the delay and you make an order and the banks don't, it gets lost and they put the money in after you've left. There's huge penalties for that. So with TFSAs, that's one thing you have to watch out for. The second thing is how the country you're moving to is going to tax it. UK, US, they don't care if it's a TFSA. They consider it a regular account, and you're going to have to pay tax on that. And then there's reporting requirements as well if you're going to the US because they have different rules on the type of investments that are not in the US. So you got to be careful of that too.
Okay. And then let's just wrap it up with, I guess, questions on pension incomes from like RIFs or RRSPs. We talked about CPP and other pensions, but what about those ones?
The pension is considered, so if you earned a pension in Canada, teacher's pension, regular pension, whatever, and you start receiving income, it's generally you have to look at the country you're moving to. There's usually a tax treaty, and that will determine how much withholding tax the pension how much you'll pay tax in Canada. So you receive $1,000 a month from your pension. If you're going to Spain, it's a periodic pension, so they withhold 15%. They'll report it on the NR4 slip, and you don't have to file Canadian tax returns in the future going forward for that. You have to check how Spain's going to tax it. And if they want to tax it as pension income, you'll usually get a foreign tax credit in Spain for that 15%. So you're not paying double tax. But generally, you can still receive your pension, CPP, old age security as a non-resident of Canada, except if you're a resident, you get a T4A slip or a pension slip and reported on your Canadian tax return. Here, it's an NR4 slip with a final withholding tax, usually 15%.
Okay. RRSP or RIF, any recommendations, whether it's one or the other? Any
Well, no,
benefit?
I mean, the RSP, you can generally contribute. We advise if you contribute, do it before you leave so you can take advantage of any RSP in your last part, your departing tax return. You can continue if you still have room, but it doesn't make sense because
I was just
when you,
wondering if, sorry to interrupt, I was
yeah,
wondering maybe to clarify that I thought that if you convert, and I'm not saying to do this today, everybody, just
mhm,
when you convert to a RIF, there is a minimum required that must go out to you per year. And I believe
correct.
that minimum doesn't get taxed, like it wouldn't have any withholding on it. I may be wrong about it, and just anything over that, or maybe that's something I have to
No,
clarify.
generally a RIF payment is periodic payment and is generally a 15% withholding tax. Yeah.
Okay. Oh, I think, yeah, I shouldn't have brought that question up without clarifying. I think it's a 15% on that minimum amount, but anything over that minimum, it's 25%, even if there's a tax treaty. But I'll clarify.
Yeah, that may be the case. So they may consider it a lump sum over and
Yeah.
above the periodic payment. But if you set up a periodic payment schedule and that's how much you're taking the minimum every time or even higher, but that's periodic, you generally take 15% withholding tax on that.
Okay.
Yeah, so you can contribute to your RRSP at any time if you have the room, but again, it doesn't make sense if you're non-resident because you're not reporting any income. So the main benefit of the RSP is to get the deduction.
Yeah. Awesome. All right, 7:35. We have asked a ton of questions. There's last chance, last question. Otherwise, you're coming to January 28th in Toronto to hear Demetrios do a more structured talk. Other than that, otherwise, Demetrios, you're more than welcome to stick around, or I know that you've got other things to do. So thank you so much for your time today, and
Yeah,
we appreciate all the information we'll provide. If there's any need for you, we'll send you some details, and you can give them that 15-minute consultation.
sounds perfect.
All right.
Okay,
Thank you,
well,
Demetrios.
no problem. If there's no other questions, hopefully I see everybody on the 28th. Serge will provide the details, I'm sure. And
Yep.
thanks for your time today.
Thank you, Demetrios.
Thank
Okay,
you. Thank
thank you.
you. Thank you.
Bye.
All right. So I hope that everybody found that really interesting. I certainly did, and I keep on
Yeah.
learning every time I talk with Demetrios.
Yeah.
Today, actually, the topic is we're going to talk about insurance. And there's two types of insurance that we're going to talk about. The one that we have in Canada, and I'm going to kind of talk about it, and Vietta's going to correct me if I'm wrong. She is much more of an insurance specialist than I am. Sorry to put you on the hot seat there. But I'm going to explain a little bit about term insurance and permanent insurance. Maybe some of you already know about that. We are looking to clarify with our providers about critical illness insurance, whether that's going to still be paid out or not. But then on the other side is insurance in your destination country. And whether or not you need to get more insurance or not, like life insurance, that's something that you would might want to just work through before you leave. So um, you can get quotes from Canadian insurers. Now, once you're not in Canada, you can't get an insurance policy with your Canadian insurers. So, if you've already got an insurance policy, sometimes it might be easier to just do another quote or application with your current provider and bump up that insurance if you think you need it. We'll go through some scenarios of why you might need it. Basically, it's coming down to paying off some debts. If you have a mortgage in Spain or whatever, or you want to make sure that when you die that everything's taken care of and your kids or grandkids or other people are taken care of. Now, the flip side in Spain is that you will need your own private health insurance, which I've spoken with a couple of lawyers today, and they've confirmed that. For the first year, it's got to be private, and you have to get it within the first 90 days. And if we have time, I'll queue up a little video I had of with Inma this morning, Inma Immaculada,
You,
the lawyer that we've talked with. After the year is over, if you're a resident, at that point you do have the option of staying with your private or moving on to the public system. So that's something that you want to talk about. Now, I'm going to bring up just a little bit of a tool to talk about this. And again, if there's any questions, please start putting it in the chat. Okay, so this is a document I'll send out with. Um, by the way, I want to say I have not sent out the previous recording yet. It was last Thursday. I have not had time to edit it all. So that email has not gone out with all the different names of the lawyers and accountants and so on that we promised. Do apologize for those that were waiting for that. We will create definitely a document with everybody we've had on board here, Demetrios, Inma, Yuri, Sergius, everybody's going to be on there with all their contact information. But today, I will send this document as well when we do the next email. And on this screen, what you're seeing is the four quadrants of potential life insurance or insurance portfolio. The first one is term life. The next one is permanent life, critical illness, and disability. So if we look at our Mark and Mary expat avatar couple, which we haven't talked to for quite a while, maybe we should find out what they're doing if they're walking their dogs or not, or one is not and the other one is. They had mortgages, they had multiple properties, they probably had some life insurance. And term insurance, just to clarify, is normally something that someone might get for a specific period of time, like a mortgage. So you go to the bank, you get your mortgage. They will try to offer you creditor insurance. Many people will sign up for that. Creditor insurance is not term insurance, it's insurance for the creditor, for the bank, to be paid off if you were to die, so that who's now paying off the mortgage payments. So creditor insurance is a nice, easy, quick way to make sure you're covered. However, it doesn't protect you, it protects the bank. So most people will then start talking to their financial planner and get a term insurance, which is usually less expensive and you can control it. So as an example, if you have a $500,000 mortgage and you get a term life insurance for $500,000 and you get it for 25 years, the same life as the mortgage, then hopefully you expect that by 25 years you've paid off the mortgage and you no longer need the term insurance. Many people get confused saying, I'm keep on paying into the insurance, but nothing's accumulated, and that's why it's so cheap. If you're in your early 40s or late 30s, you bought the house, you can get, I mean, half a million, $1 million for really, really low cost per month. We're talking about you can still get your Starbucks basically and still pay off the insurance. As you get older, it gets more expensive, but we know that life is not a straight and narrow. I've got my house, I'm never moving, or I'm never going to renovate. That insurance can go up, that need might go up or down. So um, hopefully, though, the debt does go down and the insurance stays stable, although there's options to renegotiate and get a lower rate as you get older. Sorry, not to get a lower rate, but lower the type of insurance that you need. So, would you still need that if you were to move to another country like Romania or Spain? Well, that's part of the whole discussion with your financial professional. If it's only pennies a day or $50 a month or $100 a month and it's $500,000, it wouldn't hurt to have it if you can still be part of your cash flow. If you don't have a mortgage anymore, you may not need it. And if you don't think you need it, you can absolutely cancel it. It's easy to cancel things. Just don't pay the premium or call the insurance company and says, I don't want it anymore. Um, so that's one thing you can consider. Now, permanent life is a bit more of an investment than it is for taking care of certain debts, because permanent life, and I'm waiting for Yvette to jump in at any time to clarify anything I'm saying, uh, you can have investments in that policy to make it grow faster, or you can have it accumulate enough income in there that you no longer have to pay the premiums at one point, and it's for your whole life. So it's almost like an estate planning as well. Like you definitely can leave something to the kids, even if you live to 100, because it's always going to be there, not like term where it's going to disappear at some point. So these are the two types of Canadian insurance that if you have them today and you move somewhere else, they will follow, just keep on paying the premiums and they will pay out when you pass away and the proof of death is provided. So anything to add to that, Yvette?
Well, insurance, I love the topic as it is directly connected to estate, but maybe a couple tips for our group here as potentially moving out of this country. So one of the questions pops up again is, hey, what happens if I do have this type of insurance personally, any term or perm, and I do actually die overseas? How do I know it's going to be paid out? Well, this question I directly addressed with our partners, one of them being Canada Life, and they directly stated that all it is truly a death certificate. Obviously, it has to be legit and translated most likely, but it will be paid out. Usually the process here, in my experience, it's been quite straightforward. It's just a little bit on us as consultants to complete some forms and provide that certificate for the payout. But then coming back, Serge, to once again, term versus perm. So as you said, yes, indeed, it is term insurance is a temporary product that is there just for that temporary need, usually till age 85. At 85, it is canceled as you become too high of a risk. An insurance company will not be insuring you anymore for those pennies. However, as a tip, if any of you do own a term insurance, it could be term 5, 10, 20, 35. Nowadays, it could be odd numbers like 37 or 27, depends on what is the need. You can convert any or up to any amount that you like. So let's say you have a $500,000 term insurance and you say, you know what, I'm leaving. I don't know. I would like to have something permanent because I'd like to donate here the proceeds to the charity to look after pups, or maybe you have kids or grandchildren that you'd like to leave something to. So you can convert without any medical underwriting any amount up to that maximum that you have in the term insurance into a permanent insurance. Now, permanent insurance, it's not very wide known fact, but we receive, as Serge says, dividends in that plan. And you can decide what you want to do with those dividends. You can cash them out. You can prepay the insurance with those dividends. You can finance the premiums with those dividends, or once again, you let them accumulate inside the plan and grow bigger, just like a snowball during the Canadian winter, rolling down a ski hill or a tobogganing hill. That's how fast it might grow. The fact is that those dividends grow on an average rate of 7.5%, 8% based on statistics of, once again, Canada Life. And nothing is guaranteed, but that was a steady growth in the past 30 years. So it is an interesting product, tax deferred product. Maybe we do need to clarify with the lawyers and accountants here a bit more if we are non-resident and we are accumulating those dividends. But if you don't touch them, it keeps growing, and then the benefit is paid out tax-free to our beneficiaries. And you could actually create pension plans for your kids if they are staying here. So I don't want to dwell too deep into it. It is definitely a concept. It is a very strong concept. It is interesting fact to consider. If there is worry whether it's going to be paid out, don't worry, it will be paid out even if you're not in Canada. And yet you know that you're dealing with very reputable companies. So if any questions, I'm here to answer.
Thank you. Very,
Yeah.
very good and in-depth. Okay, so now I just want to answer a basic question because a lot of people get confused, like, how do I know how much insurance I need? And I want to take you behind the scenes of how financial professionals kind of do their job to make sure that you know exactly what you would need to have covered. That doesn't mean you need to do it, but it's a duty to make sure that, you know, I was like, well, how come they didn't tell me I could have had this? If like it's only when something bad happens, right? Then it's like, oh my God, I wish I had it. And we've all been through that. That insurance sales. I mean, I go to Europe every year and I get a rental car, and I'm always like, should I get that insurance on the car or not get that insurance on the car? It's not like life insurance, it's something a bit smaller, but you're always worried if there's going to be a dent or something. And I think what I like to do is just know all the different scenarios. And I have researched, and I never get insurance, but that's me. And that's because I travel with a travel credit card that I already pay annually fees to give me that insurance. So that I've created knowledge in myself to know the importance of what I need or not. If I didn't have that, I probably would take the insurance and pay the extra amount because I can't control anybody else's driving. I can try to control mine, but some things can happen, right? So let me take you behind the scenes for 2 or 3 minutes with Mark and Mary Expat, and then I'll queue up a brief video with Inma about the need for private health insurance in Spain. And if I have any time left, then I will bring up the website for Sanitas, which is the one that she recommended in Spain. It's one of the bigger insurers, and how to do it and get a quote from maybe a 58-year-old, let's say. All right, so let me share the screen. All right, do I have, no, 1 second. I have to do something with my screens here. Loading up. Okay. Okay, so back to our friends, Mark and Mary Expat. We haven't seen them for a while. They've been moving along with their plans for moving to Spain. And I brought up the part of our software that kind of helps to figure out how much insurance is needed. Now, keeping in mind that the software is intuitive, but it also needs a lot of talk back and forth with the consultant and the clients. So what we see here might just be their current insurance need while living in Canada. But if we add, for example, other properties or other things that might be debts in Spain or other countries, that will automatically update here. So right now, if I were to click on this and take a look at what it's recommending for Mark's analysis, it's telling us that, and it's kind of small, I know that, uh, he's already got $250,000 of permanent life insurance somewhere else. His income right now is $96,000 a year. And normally, when we're talking about insurance, we're like, well, Mark, if you were to die, how much of your income would be needed by Mary to keep on having the same lifestyle that you currently enjoy? If you have kids and they're a certain age, maybe, if Mary's working, do you expect her to quit her job and watch the kids? Or is there enough money to set aside to hire a nanny or anything else? So these are all discussions that we would have. And in some cases, I've come across, well, you know what, we're going to cover it for the first 5 years instead of 8 years, for example. Because by then, after 5 years, the kids will be 23 and they'll be expected to be on their own and blah, blah, blah. And we don't really need that much. But basically, it's an individual thing for each person, and that could be part of the discussion. In here also, we don't see anything else in terms of mortgage. Oh, we actually we do have liabilities to pay off mortgage. So if the software has a mortgage and it does here, it says existing mortgage 250, then that would pay it off. So intuitively it says, well, basically we think that you would need $545,000 of insurance to cover debts and costs, right? This is not specifically for permanent life or estate planning. It's for to cover if you were to die yesterday, what are the exact costs to the estate that Mary would have to take care of in order to be able to have the same lifestyle and not have to sell the house and be destitute, basically. And that's the same thing would happen for Mary because she has a different income. She's got 78,000 a year. You can see here I didn't talk with his funeral expenses. So whether that's, ashes or burial, whether it's here or in Spain, these are other questions that might come up. If you know enough before you leave that you're going to buy a property in Spain and you're going to have a mortgage there, then that mortgage, what I found out is that in Spain, the bank will require an insurance, just like they do in Canada. So if you can prove that you have that insurance, that's great. If not, you're going to have to pay insurance through the bank, same kind of creditor insurance there. So, and if you're lucky enough that you don't have any debts, you're going to just, you just have the cash flow. Do you still need insurance? That's a personal thing. Like, do you want to leave something behind? Do you want to make sure that your spouse is taken care of? In case you pass away, does maybe he'll have to go back to Canada or who knows? Like that's a personal decision that you'd have to decide on. Make sense?
Absolutely. And if I may just add a couple cents here before you continue, um, life is a funny thing. Today I was talking to a client of mine, and she was telling me how her friends moved to Montenegro, which is one of the destinations, if you will research the top retirement destinations of retirement. So they sold a house here. They took the money, they went there, they bought their house in Montenegro, they lived a wonderful lifestyle, and 3 years later says, you know what, it's not for us. And they're coming back. But now they're coming back with much less money. They lived off that money. It is, I suppose the message I'm trying to convey is don't burn your bridges.
That's
And
a
you
great
might
point.
say, yeah, you might say,
No,
hey, I don't need that insurance. I don't need that. Well, think before you leap and do not burn the bridges. Life is funny. We don't know.
yeah. There's a great question coming up in the chat, and but before we get to that question, and we're going to start speeding through the last 5 minutes. You brought to mind a good idea, Iveta. With the permanent life insurance, what you may not be aware of is that as you build up, and it's more expensive, obviously, than term. Like a term policy that's $50 a month could be $500 a month for permanent, or we'd have to do quotes, but
Mhm.
it accumulates, and as it accumulates, it's actually something, an asset that you can either borrow from or take money out of to provide cash flow. And let's not get into that too much today, but that's part of the thing. Lewis asked, are you aware of what conditions are for dual citizens? Um, some of us have a European citizenship and contributed to a public European medical insurance plan. Would it be the same need to have private insurance for a year, or the public plan will kick in? That is actually a question I asked Inma this morning because I'm in that same situation. And she said that it would have to be looked at to see, obviously, because it's within the Schengen zone, the European zone. You have to fill out some forms. And yes, you might not need to then get the private insurance because you're covered within the European Union. But that would definitely need to be a discussion with, once you get to Spain, you talk with someone like Inma that can do that legwork for you. Good question.
Very good,
So
yeah.
let's just give a little bit of a taste, and I'm not going to show the whole video. It's 12 minutes long, just a little bit to whet the appetite, let's say, and then we'll do the last minute with the website for the public health and private health insurance. Life insurance. But you just
Mm.
mentioned that people need to get their own private health insurance in Spain, right?
Yes, the
Would you
first
be
year you need to get a private health insurance. From the first year in Spain, after 1 year being legal resident in Spain, you can choose to continue with a private health insurance or be included in the public system.
okay?
But at least the first year, it is for sure that you need to apply for a private health insurance.
And that's for everybody, not it doesn't matter golden visa, right?
Correct.
Okay, so even now, so any Canadian moving to Spain on any type of visa needs to get private health insurance. It's a requirement.
If it is not a working visa, because with the working visa, as you are going to be registered in the public system because you are
Yeah.
working in Spain, then you don't need private health insurance. But for the non-lucrative or golden visa or the student visa, any type of visa, why that you are not working in Spain, you need private health insurance.
Okay, I'm going to stop it there because we really just have 3 minutes left. I promised to share this to everybody. It's a lot of good information. In fact, it's almost a buyer beware information. We got really deep into the weeds about this because she said not all private health insurance is created equal. There is some private health insurance, like you could be in Andalusia and you go to you got your property, you got your visa, you're going to an insurance company now, and you said, I need private health insurance, and they may sell you private health insurance just for that province. And so that you could be driving somewhere else in Spain and have a car accident and die and you're not covered or whatever. Not the death, but so it's very, very important. And it's almost like there's that communication issue because not everybody in Spain is going to speak perfect English. And you're not going to speak perfect Spanish. So even the part of going to an insurance company and saying, "Hey, I'm Serge. I have I need, I might say, I need the cheapest public private health insurance you have." And they're going to say, okay. They might not even ask, what do you need it for? They're just going to do a quote and give me the cheapest, and that cheapest is not going to cover the stipulation that Inma told me. And I'm sorry, I'm going to go over a minute. I apologize, because this is really important. Is that if you can see the screen here, this is Sanitas. This is the big company that she uses. It's one of the biggest in Spain, and the big part is that it's got to have seguros sin copago. What this states is that there's no additional cost that you have to pay. So it covers everything. All right. That's what must be part of the insurance policy for private health insurance. So if you'll indulge me, let's go in and do a little bit of a quote. I'm going to try to figure this out. It's on the fly. I know a little bit of Spanish, As you can see, there's nothing here to change it to English. You can try to use Google Translate, but solo para mí is just for me. All right, so I'm going to use it just for me. I'll put in a date of birth. I'm not going to tell you how old I exactly am. I'll just put something here, and I'll put 1965. Let's go that. Now you need a Spanish postal code. I figured that out. So let's see if I can figure one out here. Malaga, Spain. Let's go to map. Let's just zoom in here and pick something.
Why don't you ask Sergey? Just give us an idea of
It's okay. I
how
got
does
one
it
here.
even look?
I
You
got
have
one. 29007.
Oh, easy. No number, no letters.
29007. And the phone number. Let's go get a phone number. 9520. How many numbers are 9520450? Right? Okay. Let's try. Let's see what happens.
Mm.
So obviously you're going to want to talk with a live person, but just to give you an idea. So how old is the person? 1965? That makes
Yeah,
them
that 60 years old.
okay. Thank you. So it looks like it's 116 euros per month for
Not
Sanitas
bad.
Más Salud Familias. You see this thing here, Cinco Pago? That's what you're looking for.
Yeah.
This isn't okay. We're not the insurance agents there, but this is important information when you're getting there. And from what I understand, when you're dealing with a legal firm, and today I actually interviewed another legal firm in Malaga. We're going to be providing the video soon. They cover a lot of this stuff. They help you get the property, and they give you the checklist. You need to get a will. You need to get insurance. Get your power of attorney. That's really important. Okay. I'm going to stop it there. We're 2 minutes over, and I hate that because I always like.
It's okay. Just two more reminders.
Yeah.
Not gonna take more than 2 minutes. We have surveys coming out. We want your opinion on how so far this class has influenced you. And Serge, do you offer complimentary sessions?
Sure.
Financial planning sessions?
Okay, yes, consultation. Yes.
Yes.
Whether you have your own financial planner now or not, we're not looking to make you change, but we definitely want to make sure that you're getting all the right information. And whether they're doing the best thing possible for you or not now, I have found it very rarely that they'll be able to look at the whole picture. So do yourself a favor, talk with us, get a consultation, get a financial plan, and if it works out that we become business clients, great. If not, you can go on knowing that you've got a second set of eyes looking at this with some referrals, and you can tell everybody else about us as well.
Mhm. Perfect. Thank you. Now you can close.
Now I can close. Okay, great. Thank you so much, everybody. Appreciate your time today. We're going to end it off here. Have a wonderful evening. See you next week.
And the next session is January